NVIDIA doesn't just sell the chips behind the AI boom. They buy stocks too. And what NVIDIA buys tells you where they think this whole thing is going, long before the rest of us catch on. Their latest filing shows about $18 billion sitting in stock. And their single biggest bet is a company you would never expect. It's their oldest rival. Hi, I'm Ko. I've been investing since 2007. And for the last 20 years, I've worked inside tech startups, big tech, and my own businesses. That mix taught me something most people never learn. It isn't just how to make money. It's how to make your money work for you, so you can take more shots on goal. That's the whole point of this channel, building a portfolio that buys back your time. Today, we're going to read the secret stock portfolios of the 7 biggest names in tech. We'll walk through where each one is quietly placing its bets, and one of those bets is something almost everyone watching the AI boom completely misses. Before we get into it, none of this is financial advice. I'm not telling you what to buy. I'm showing you how to read a signal that's hiding in plain sight. And you can do it for free, because every quarter, the biggest companies in tech have to hand you a receipt. Any big investor managing more than $100 million has to file a document with the government called a 13F. It's basically a public list of every US stock they own. Most people only ever watch Warren Buffett's, and almost nobody watches the tech giants. But theirs are far more interesting. When NVIDIA or Google or Amazon buys a stock, they're not just chasing a price. They're buying a piece of something they need, which means their money points straight at the thing they're scared of running out of. I call it following the bottleneck. Picture the whole AI boom as one giant factory. In the basement is the power plant, the electricity that runs everything. Above that are the machines, which are the chips. Then comes the building itself, the data centers and the cloud. Above that is the wiring, the gear that moves data between thousands of chips at once. And up top is the product, the models and apps everyone actually uses. Every bet these companies make lands on one floor of that factory. The floor they fund the hardest is the bottleneck they fear the most. And that's where they think the future gets decided. So, if you watch which floor the money piles up on, you can see it too. Here's why this matters for you. By the time a trend hits the headlines, everyone already knows. These filings let you see the build-out while the concrete is still wet. So, we're going to read them one by one. And we'll begin with the engine of the whole boom. NVIDIA's latest 13F shows about $18.4 billion across just 7 companies. And that's up 40% from the quarter before. Almost every holding maps to one floor of the factory. CoreWeave and Nebius are the building, because they're AI-first cloud companies, or NeoCloud, whose entire data centers are built around NVIDIA chips. NVIDIA nearly doubled its CoreWeave stake in a single quarter, taking it up to $3.7 billion. Read that again. NVIDIA is funding the customers who buy NVIDIA chips. Coherent and Nokia are the wiring, because they make the parts that move data between chips inside an AI cluster. NVIDIA kept telling everyone networking was a bottleneck. And then it opened a nearly $2 billion position in exactly that. Synopsys is the design software used to draw next-generation chips, including NVIDIA's own. That's 4 floors of the factory inside a single portfolio. And then there's the holding that makes no sense. NVIDIA's biggest position isn't a partner. It's Intel, $9.5 billion. More than half the entire portfolio, sitting in the rival it spent 20 years beating. Why would the king of AI chips, the company it crushed? It's because Intel runs something NVIDIA doesn't. It owns chip factories on American soil. NVIDIA designs chips, but it doesn't build them. Almost every advanced chip on Earth gets made in one country, Taiwan. And that is the scariest bottleneck of all. The Intel stake reads like NVIDIA buying itself a little insurance against it. But a 13F has a blind spot because it only shows public stocks. It's the tip of the iceberg. The real conviction lives in the private bets, the startups these companies fund before you ever heard of them. And NVIDIA's private money points at one floor harder than any other, through its venture arm. NVIDIA has been pouring cash into the basement of the factory. It isn't going into chips. It isn't going into cloud. It's going into energy. NVIDIA backed a company building an actual nuclear fusion reactor, the kind that's supposed to make near limitless clean power. Why would a chip company care about fusion? Sit with that one, because we're coming back to it. Now, let's look at Google's parent company, Alphabet. Its 13F jumped to about $4 billion, up from 2.5 just 1 quarter earlier. The biggest position is CME Group, the company that runs the world's largest financial exchange. That looks random until you learn Google is moving CME's entire trading system onto Google Cloud. It's the same playbook as NVIDIA, and where you buy a piece of your own customer and lock them in for a decade. Alphabet also holds ARM, the company whose chip blueprint sits inside nearly every phone on the planet. As power gets tighter, the most efficient chip designs win. And Alphabet is telling you it knows that. Then come the far out bets, which are 2 satellite companies. One of them beams phone signal down from space, and the other photographs the entire Earth every single day. That's Alphabet feeding its maps and its AI with data nobody else has. The loudest signal is one stock you never expect from a research company, a cancer drug maker. On its own, it seems strange until you connect it. Google's AI lab spun out of a company called Isomorphic Labs that uses AI to design brand new medicines. And it just raised around $2 billion. So, Alphabet is betting on AI drug discovery in 3 places at once: its research lab, its venture fund, and its public stock portfolio. When the same idea shows up on all 3 floors, that isn't a hunch, that's conviction. Then there's Amazon. And Amazon almost tricked me. Its public filing is about $2.5 billion, but 90% of it is a single stock, Rivian, the electric truck maker that builds Amazon's delivery vans. There's almost nothing about AI in there. So where is Amazon's AI bet? It's hidden from public filings because Amazon makes it privately, and it is enormous. Amazon has committed up to $25 billion to Anthropic, one of the top AI labs, and tens of billions and more around OpenAI. But these are normal investments. In return, those labs promise to spend over $100 billion running on Amazon's cloud. So Amazon isn't really buying stock. It's buying its own biggest customers, and it's locking in a decade of cloud builds. The 13F barely whispered it, but the real move was off the page entirely. Microsoft is the same story, taken even further. It barely keeps a public stock portfolio worth watching. And its biggest AI bet, that giant stake in OpenAI, sits completely outside the filing. That's the lesson hiding underneath all of this. The bigger the conviction, the more likely it lives somewhere the public list can't show you. Then you reach the other end of the spectrum, where 3 of the biggest names in tech barely let you read anything at all. Take Apple. Apple doesn't run a venture arm you can follow. Instead, it quietly buys up small AI teams, around 7 of them in a single year, and folds them straight into its products. The terms are undisclosed, and the headlines are avoided. And that silence is a signal. Apple isn't trying to fund the AI world. It wants to own a private little slice of it, running right there on your iPhone. Meta plays it the opposite way, making one giant swing instead of a spread of small bets. Meta paid roughly $14 billion for nearly half of a company called Scaled AI. But it wasn't really buying a startup. It was buying one person, Scale's founder, to run a brand new lab Meta calls superintelligence. Everything else, Meta is building itself, with over $100 billion in spending lined up for the next year alone. Meta would rather own the whole floor than rent space on someone else's. Then there's Tesla, which barely invests outward at all. Tesla's one big AI bet is $2 billion into xAI, and xAI is Elon Musk's own AI company. So even that money isn't really reaching outside the family. Tesla's real bet lives in the self-driving cars, the humanoid robots, and the giant computer it's building to train them both. These are 3 different companies, but they're sending the same quiet message. When a giant refuses to fund the ecosystem, it's telling you it plans to build the entire floor by itself. That's the boldest bet of all. And it's also the easiest one to get wrong. Now, before you go and open a filing tonight, I owe you 3 honest warnings. The first is that these reports are 45 days behind, so you're reading a photo, not a life. The second is that they only show US stocks the company owns outright, which means no private bets, no overseas holdings, no bets against the stock. The third is the subtle one that trips people up, which is that a position isn't always a vote of confidence. Some are old leftovers from a deal years ago, and some are relationship moves rather than real conviction. So you don't copy these portfolios. You read them for direction. The bets worth your time are the concentrated ones, the brand new ones, and the ones that line up across the public list, the venture fund, and the research lab all at once. So step back, look at the whole factory. Everyone sees the chips, the clouds, and the wiring. But if you follow where the smartest money keeps quietly piling up, it lands on the one floor almost nobody is watching, which is the basement, the power. NVIDIA is funding fusion. Google is funding fusion. Across the board, these companies are scrambling for electricity. Picture a data center the size of a small town, with thousands of chips glowing inside it, burning through more power than the town next door. Now, picture 100 more of those, going up all at once, all plugged into a grid that was never built for them. That's the real race. It isn't about who has the smartest AI. It's about who can keep it powered on. The companies building this future just told you, with their own money, that the bottleneck isn't intelligence, it's energy. And the best part is that you can watch every bit of this for free. Every 13F lives on the government's website. You type in a company name, open the latest filing, and you're reading the exact same receipt I just read. For the private bets, a site called Crunchbase shows you who is funding which startup. You do get a limited view with the free tier, but you get the most complete view with a subscription. And no Bloomberg terminal is required. You just need to ask one question every single time you look. Which floor of the factory is this bet funding? And what does that tell me they're afraid of running out of? And that's the whole game. The market sees the obvious story. The chip stocks everyone is already shouting about. But you get to see the whole factory underneath it, and the power bottleneck nobody is talking about yet. That gap, the space between the headline and the receipt, is exactly where a work optional portfolio gets built. It happens slowly and quietly, years before the crowd shows up. The filings are free. The pattern is sitting right there, and you just have to learn how to read it. I'll see you in the next one.